Hello and welcome to this module on the Bank Secrecy Act and Anti-Money Laundering Program, or the BSA AML. Let's begin with a review of the Bank Secrecy Act and Anti-Money Laundering Program. The Bank Secrecy Act, or BSA, is a U.S. federal law that was enacted in 1970 to combat money laundering and other financial crimes. It requires financial institutions to assist government agencies in detecting and preventing money laundering and other financial crimes. And it also requires financial institutions to maintain certain records and file reports with government to help detect and prevent money laundering and other financial crimes. The Bank Secrecy Act requires financial institutions to establish and maintain an effective anti-money laundering program. Now, the anti-money laundering program must include policies and procedures as well as controls to detect and prevent money laundering and other financial crimes. So what is an anti-money laundering program? Well, an anti-money laundering program is a set of policies, procedures, and controls implemented by financial institutions to prevent, detect, and report money laundering activities. A key element of the anti-money laundering program is the Customer Identification Program, or CIP, which requires financial institutions to verify the identity of their customers using certain documents or information. So let's talk about the compliance officer in an anti-money laundering program. So the anti-money laundering program must have a designated compliance officer with certain responsibilities. The anti-money laundering program compliance officer is the person responsible for overseeing and managing the anti-money laundering program within a financial institution. And the anti-money laundering program compliance officer is responsible for developing, implementing, and maintaining the anti-money laundering program, including policies, procedures, and controls to prevent and detect as well as report suspicious activities. The anti-money laundering program compliance officer is responsible for ensuring that the financial institution's employees are properly trained in the AML compliance. Now let's talk about suspicious activity reports, or SARs. Under the Bank Secrecy Act and Anti-Money Laundering Program, mortgage lenders must file suspicious activity reports, or SARs, to report suspicious activity related to a mortgage loan application, such as fraud or money laundering. Now, SARs must be filed whenever a person is engaged in suspicious mortgage activities involving a transaction of $5,000 or more. And examples of suspicious activity that may trigger a SAR for a mortgage include falsified employment or income information, fraudulent property appraisals, undisclosed debts or liabilities, or other misrepresentations on the loan application. Now, SARs for mortgages must be filed within 30 days of the detection of a suspicious activity if the perpetrator is an identifiable person. So the SAR must include a description of the suspicious activity and the identity of the individuals involved and any other relevant information. On the other hand, SARs for mortgages must be filed within 60 days of the detection of the suspicious activity if the perpetrator is unidentified. The financial institution cannot reveal to the customer that a SAR report has been filed against them, and that's something important to understand. Let's talk about the Financial Crimes Enforcement Network, or FinCEN. The Financial Crimes Enforcement Network is a bureau of the U.S. Department of Treasury that is responsible for administering and enforcing the Bank Secrecy Act and Anti-Money Laundering Program. So FinCEN is also responsible for receiving and analyzing suspicious activity reports, or SARs, that are filed by financial institutions, including mortgage lenders, brokers, and servicers. And FinCEN uses the SARs and other data it collects to identify and investigate potential cases of money laundering and other financial crimes. And this concludes our module on the Bank Secrecy Act and Anti-Money Laundering Program.